Good evening, Director General, ADB, Deputy Ministers, Secretary Treasury, our Treasury colleagues, secretaries, and the officials of the National Credit Guarantee Institution, which was recently established. It's indeed a great pleasure for me to participate here as a Governor, Central Bank, especially because this is one of the initiatives, as already mentioned. The idea was basically discussed for a long period. I can remember, I think it's first mentioned 2016, even before that, I can remember basically drafting concept papers and the ideas and proposals on the National Credit Guarantee Institution, but which did not come into light for a long period for various reasons. I don't talk about those reasons, but finally, now we have a very important initiative that government has been able to establish this important National Credit Guarantee Institution. Obviously, I must thank ADB for providing initial capital, one of the constraints I think earlier had, as well as providing technical assistance to build institutional infrastructure, which is basically private-public partnership and also right governance framework. I think that is important to sustain this institution for a long period and expand the availability of credit, access to credit for a wider community, especially SMEs and MSMEs in a kind of emerging market economy. So understanding our current situation. So let me just basically talk about the role of why central bank is involved. I think earlier we as a financial advisor to the government, even under the previous law and current law, we have been basically giving some, basically having some discussion with the government to establish this, mainly from the access to finance, access to credit point of view. But when it comes to central bank key mandates, we all know our mandate is basically, there are two mandates. One is the price stability, that is monetary policy implementation. Secondly, financial system stability to maintain stable financial system, especially as a regulator of public deposit-taking institutions, both banks and non-bank financial institutions. Our mandate is to protect public deposits money, and use that money efficiently for financial intermediation process so that these financial intermediation institutions can basically intermediate these large public deposits, both individuals, companies, corporates, governments, in a smooth manner so that that credit can be made available to support the economy through a smooth process while maintaining the stability in the system. Why that is important to maintain stability? This is because if there's a kind of a issue in the financial intermediation process and also instability in the system, then obviously people will not put their money in the financial institution as deposits. That will collapse the whole system. The first important mandate for us is to maintain stability of the financial system with the viewpoint of protecting public deposits, that all countries' people's money through deposit-taking institutions. So this is something different, important mandate for us. And how this one comes into, as why we are a stakeholder, this is partly not financial stability mandate, this is partly financial inclusion, as already mentioned. Financial inclusion is also an important one. We are also one of the stakeholders to promote financial inclusion in this country, because we know inclusive financial services is must for economic development. So there are several ways financial inclusion can happen. So in our mandate, or in our role, we play different roles to promote financial inclusion. First one is mainly through facilitation of access to credit for all the sectors. One way is to monetary policy framework, interest rate structure, from business cycles, economic cycles, monetary policy can be tightened, loosened, and now we have a very normal monetary policy cycle where interest rates have come to normal situation, credit is flowing nicely to the economy, credit is expanding to the economy, to new business and everyone, so that is happening. But there are distortion interventions are needed in between the sectors. You know why certain sectors are not getting credit enough and why some are getting more. That's because of the risk appetite or risk taken because the banks cannot take too much risk because they are giving money out of someone else's money. So they need to manage the risk of when they lend money to businesses. When they see there are risky customers, obviously they have to take a bit more care when they are lending. Especially countries like us in this kind of development, the access to credit basically because of lack of information of the creditor, then banks are reluctant to provide credit. So one of the reasons I think I can say this one important one, I think I'm going to tomorrow talk about this on the credit information, credit worthiness is one important element that banks can provide credit is to have proper information on credit worthiness of the consumer of the borrower. When you have that information, obviously banks can easily lend to any sector. What we don't have here, what some other countries are having is the very rich information on credit worthiness through credit information bureaus and through private sector institutions and government institutions. This in our country, Sri Lanka, we have Credit Information Bureau. I think we must emphasize the important role of credit worthiness information of the customer. That is one reason where banks or financial institutions can provide credit without collateral if we have a good information on credit worthiness. This is the role of the Credit Information Bureau. I think we talk about it later. This is not today. Second one, the ability for this, because if they don't have credit information, credit worthiness, then obviously banks rely on collateral or looking at the cash flows. So this is where when we don't have that information, there need to be some intervention coming from the government in terms of one is a credit guarantee schemes, other one is providing certain subsidized credit. These are the models, instruments that we have been using in the past also. But we did not have this Credit Information Bureau or credit guarantee institution. This is, I think, one of the very important steps where when credit worthiness information is not available, especially MSMEs, that information is not available through CRIP. It's available only for existing creditors. This way, I think we need to develop that part separately. That's one important reform that yet to happen. Meantime, this credit guarantee institution is one other instrument where market-based instrument, the premium can be charged, but has a capacity to leverage initial capital as well as premium collection can be leveraged to provide much more access to people who banks wouldn't have information on the credit. That's, I think, important process. And next important one is the ability for the banks and financial institutions to able to recover the credit whatever they have. This one guarantees the credit recovery so that banks can take more risk. So other one is the bank's ability to recover whatever the loans are given. If that is strengthened, then obviously other measure that I see to improve access, improve financial intermediation, make it more efficient, financial institutions should be able to recover whatever the loans that they have given if they are unable to collect. That's why we have long allegations of bad loans, write-off loans, and not being able to recover. I don't think if we have proper recovery processes, proper transparent, fair recovery processes, that would not happen. That is the third part I want to mention. And those are the important ones, I think, going forward. One thing I want to mention, one other reform that we have been talking for a long time is the bankruptcy law. This also will help the credit delivery process to the whole economy. For example, now we have been talking about the bankruptcy law for a long time. Bankruptcy law certainly helps the enterprises and entrepreneurs. The entrepreneur who cannot run the business any longer, they don't have to close and go shop. They can transfer the ownership to another entrepreneur who can run the business. So that enterprise is protected. Entrepreneur can move along and giving business to some other. That's a smooth process of transferring the enterprise without losing employment, without losing the business. That is the other important reform in my view that needs to be also, I understand there's a law already drafted. I think that is another important pillar in this process to have more inclusive financial services. All these three reforms, I think, will certainly ensure financial inclusion and more access to credit. In addition, what we are doing from central bank point of view, the financial inclusion side, one is to have more financial literacy and prevent people getting into scams like financial scams, that financial literacy, financial education, as well as basically providing more regional base. And tomorrow I'm going to one of the regions, to a regional forum to educate people in those areas about financial inclusion. This is I think just I want to mention from the central bank role in this area, where how we can contribute and support the financial inclusiveness, both in terms of access to credit and both in terms of financial inclusion coming through more financial awareness, financial literacy, and also having more credit and more efficient financial intermediation process in the country. Thank you.